Hi students, so welcome back to class number 23. So we are in the CMA and financial management of our CMA ICWA Inter. So we are now going on with the standard costing chapter. Sorry for a gap, I had a lot of some personal work. So now I am back with standard costing, and today class we are purely going to discuss about what is material variances and also an example problem. Okay, so please continuously watch our videos, and I hope this will be the right point. You will be in full-fledged preparation for your examination. All the very best and stay motivated. Let's go on to today's class of standard costing, and only the material variances is covered today. Maybe one or two more example problems I will release in the next video. So with this video and next video, we will wrap up the material variances and move on to the labor variance and other variances in the upcoming classes. So what is this standard costing? Okay, what is this standard costing? So standards are fixed for costs and revenues, and controlling is performed with variance analysis. So if you practically go and work in a manufacturing environment, most of the manufacturing companies use standard costing methodology for their cost accounting. So these are all a fixed costs and revenue, okay, based on a lot of inputs from various functions. For example, if your company is making a product, and that product consists of various child parts, and assembling of all the child parts, the end result will be the final finished goods or the final product. And all these child parts may be supplied from a supplier, or it may be manufactured in-house. Okay, so if it is manufactured in-house, okay, you can get the input of the product development team. What is the square area, what is the type of material used, and what are all the process involved in manufacturing it. And once it is manufactured, what are all the other process, like there may be painting or post manufacturing finishing touch up work, all those work. So completely end to end you can analyze all the costs and divide by the quantity of the batch, and you can fix a standard cost for the period. So all the company, maybe they have a process for every 3 months revising the standard cost of the material in their system. So there will be a ERP system. So ERP system is nothing but a database where all your financial, not only financial, finance is one of the module of ERP. All the data will be stored. So if there is one child part, and the child part number, you will have a unique identification number for each part. For example, A is a part in your SAP or some other ERP which your company is using. So the A will have a particular standard cost, and this standard cost will be revised every 3 months. So how it will be revised? Based on the input received by the finance department from various manufacturing. So manufacturing department will give details about the usage of material, usage of labor. So with that we will update the standard labor cost, standard material cost, so that when a product is manufactured, automatically their standard costs are pulled in the financial platform. And when the end product is finished, they will make a production count of end product, and automatically the cost of the end product is also calculated. Just imagine this one concept called standard costing. So how much it is making the life of the financial accountant much better. Okay, or else analyzing the cost of the inventory will, people will go mad. The process will be so tedious in a very big manufacturing company with a lot of end product, and each end product is having thousands of child parts to get manufactured. So you cannot do the reconciliation finally. Okay, so these are standards or some fixed costs. You have fixed Okay, either for cost. Now I set the cost factor, same way for revenue. For example, when the finished goods is going to be sold, you have to make a sales invoice for it. So while making the sales invoice, automatically when you type, so your company is manufacturing a mobile phone, so mobile phone, a particular model, you will type the model number, automatically the standard price of that will be pulled in. So that is called the fixed revenue. Okay, so what is controlling? So what is controlling? So here, uh, variance analysis. So variance analysis, now you have fixed the standard and you will get the actual details during the month end. So month end you will do all the books closing, and after that you will take all the actuals and take the actuals data per product level and analyze with the standard whether standard has to be updated or why the actual is higher than the standard, what are all the reasons that has so you have to deeply drill down all the reasons, whether because of material or labor or variable overhead or fixed overhead, why my actuals are higher than the standard. So if it is material, because of what? It may be because of material usage, it may be because of material price. So why my actual cost has gone over and above than standard, or why it is less than the standard. I have achieved some saving, I have to know how that saving has come. Then only as a financial accountant you can go to the MD's desk and report that yes, we have received saving, we have received savings from material price because of tight negotiation done by the purchase department, we have achieved this. Then only you can say this, then only any incentive will be given to the purchase department. So finance is like a gateway, and all the departments metrics will be analyzed with the inputs of finance department only. Okay, so you guys are going to be the key functional, key member of the organization. Okay, so these are all a predetermined cost. So your actual cost is going to happen. Before that, we have predetermined standard cost. That's why it is called a predetermined cost. It's a simplified costing process. Yes, we discussed reconciliation of cost and financial accounts is much better. Okay, so how the reconciliation is better? Maybe your P&L, your financial accounts may say the total expenses that has happened for the month is 1,000 rupees, but the cost accounts as per standard, number of quantity of material taken for the production and multiplied by the standard cost, it comes to 900 rupees. Okay, so cost account is saying 900, financial account is saying 1,000 rupees is your total expenses as per PNL. So gap of 100, so what it is? So that is what is the variance, and you can control it through the variance. And reconciliation is also lot more easy. Okay, if you don't have standard, line by line you have to find what is the difference. Since you have a standard, you can just map between the standard and actual and do the reconciliation of the cost account and the financial accounts. Next we are coming to the variances. So this is what, where is our topic. Whatever I spoke till now is a story. Some people who are working in a core industries like manufacturing industries would have been able to understand that. Maybe some people are in IT or some support or some tax department, so it may be very difficult for them to understand what I spoke till now. Maybe you can rewind and say, or in our group chat you can just post your queries if you have any. These are all some practical examples. Anyway, as a cost accountant, if you are in a manufacturing company, you will be exposed to all this what I have said previously. Now we will go inside the subject. Of course, scoring a good mark is only more important than practical exposure. But when time permits, you speak to the persons who has worked in the industry, also gain some practical. That will be helpful for you while attending the interviews. Okay, and all this formulas, everything you need not mug up at all. Everything will be printed if you have a practical knowledge, and automatically you will be able to deliver good in your examination. And nothing you will forget when you go to the final, you will not forget the inter syllabus when you have practical discussions on the topics. Okay, so that's why I always do some practical discussions before starting the session. So now going to the material cost variance. So what is material cost variance? Now I have decided to do a product, and for that product, 100 rupees is a material cost, but after doing the product I come to know my cost is not 100, it is different. Maybe it is lesser than 100 or more than 100, because there may be a price that is fluctuated because of the change in the price. What price? The product will have a lot of child parts, and all those child parts is bought from supplier, and that supplier price may vary. They will not always charge. For example, now during the corona season, the steel prices has gone up, many metal prices like aluminum has gone up, and during this time of course the supplier will increase the prices, but standard I would have fixed before, and after that the price has increased. So this is the variance that has happened because of change in the price, and that's we call it as price variance. Okay, any change in the material cost, and that due to the price of the child parts, then it has, then it's called the price variance. It is not only maybe the price. For example, the diesel cost is going up like anything. It has hit a century recently now, so the material has to come through the truck only to the factory. So the diesel cost has gone up, the transporters bill would have also gone up, the freight charge or the logistics expenses would have gone up, which means indirectly your input material cost has gone up. This is also a kind of price variance. So there may be n number of reasons. So few reasons is what I stated. So this is what is the price variance. So the change is happening in the price. So always the change is measured with respect to standard. So always the price variance or any variance will be standard minus actual. Okay, standard minus actual. So standard price of a material, for example, one of the child part A is one of the child part. What is the standard price of the child part minus what is the actual price? So during the period actually at what price you have bought it. So this is called the difference in the price multiplied by the actual quantity. So you have used in the production some 100 numbers actual quantity. For that 100 numbers, what is the change in the price that has happened? This is the formula to calculate the material price variance. So change in the price, which is standard price minus actual price multiplied by actual quantity. So you can say it as actual quantity into standard price minus actual quantity into actual price. This is called material price variance. Okay, so the price is varied. Price is controlled by the purchase department of the company. So purchasing department will issue purchase orders to various suppliers to bring in the materials for the production. So it is their metrics, so they have to control it. So fine, as a finance people, you have to question the purchase department if you find adverse variance in material price. Okay, so material usage variance. So what is material usage? For example, to make a mobile phone, okay, you have to assemble various parts. Okay, there will be a, for example, there is a part called A, and there is a two usage of that part. What does it mean? For making one phone, you have to keep two parts of A, then only it will get manufactured. There will be thousands of components. One of the component is A to make the mobile phone. So there is a two usage. Okay, so two per mobile phone is the standard. However, during the actual, if you analyze, for manufacturing 100 quantity, standard is 200 units of the child parts should have consumed, but actually 210 would have consumed. How? Maybe the 10, yeah, the technician who is assembling has misplaced it, or something is not functional, so you have taken it and kept it somewhere, or the person who is delivering the material from the warehouse, he has misplaced it. So there may be a lot of reasons, but this is the efficiency of the manufacturing. Okay, so manufacturing has ensured the usage of a material should be correct usage. He should not allow excess usage of material which is a loss to the company. So what is the usage variance? Usage variance is difference in the usage. So standard usage minus actual usage multiplied by standard price. Okay, so here price is fixed. So in our price variance, actual quantity, so quantity is fixed, change in the price multiplied by the actual quantity, that is price variance. Now change in the usage, so standard minus actual, change in the usage multiplied by standard price. Okay, whatever is the standard price, that is the material usage variance. So now what is the usage variance you have seen? So in our syllabus, the usage variance is classified into mix variance and yield variance. Okay, so overall material cost variance is bifurcated into usage variance and price variance. Okay, so which is nothing but material usage variance plus material price variance is equal to material cost variance. Okay, same way material usage variance is bifurcated into material mix variance and material yield variance. So material mix variance plus material yield variance is equal to material usage variance. So all these three, the sum total of mix and yield variance will give you the usage variance. Usage variance plus price variance will give you the material cost variance. This is a checkpoint. In the next slide, I will give you an example problem. I think this is a little difficult to understand, but I would suggest you also see the next. I will come to the discussion on the problem shortly. While discussing the problem, you will understand all this concept, and I request you to rewind to this theory session once again and also see the problem once again. And nobody can even take a single mark out of you from the material variances part. Okay, so that is about the material usage variance. Now material usage variance has to be controlled by the production department, because production are the people who are using the material to produce the finished goods. Next is the material mix variance. So usage variance is classified into mix variance plus yield variance. So mix variance plus yield variance is equal to usage variance. So what is the material mix variance? So for calculating the material mix, so what is it? Okay, for example, you are in the chemical industry. For example, in a chemical industry, for manufacturing a particular chemical, you may need to add two or more chemicals, and then the chemical reaction will happen and the final finished goods will be produced. For example, A is a chemical, B is a chemical, and A plus B is equal to C. C is the end product or finished goods. Now there is a standard. For example, for making C, 50% of A and 50% of B has to be mixed to make C. This is the standard. But uh, during the actual, when you take all your analysis of the cost, material issued from the warehouse to the production and final finished goods that has come across, there will be some plus or minus things that will happen. Of course the product quality is has to be good, and that the overall company has to ensure it. But when it comes to there may be 48 percentage of A and 52 percentage of B, maybe something like that. When we analyze the end-to-end quantity, maybe the quantity would have been misplaced also. But the mix is something like when you mix two items and produce the end product, that is where the mix variance comes into the picture. Okay, so that is called mix variance, and here you have a new term called revised standard quantity. So what is revised standard quantity? So revised standard quantity is standard mix of actual output excluding any standard losses. So there will be an actual output. For example, in the same chemical industry, what I said what I said. So in that, A plus B is equal to C. So in that case, C is the end item that is produced. So over a period of time, 100 kgs of C is produced. For 100 kgs of C, actually the percentage of A and B would be different. But what is the standard for it? That would be given in the question. For example, 50 percentage of A and 50 percentage of B is the standard. So 100 kg of C is produced. So which means 50 kgs of A and 50 kgs of B has to be used, and that is standard, and that is called revised standard quantity. So standard mix of actual output, C is the output, how much kg of final output is produced, multiplied by the standard percentage of each item that has to be mixed to find the end to make the end product C. Okay, so standard mix percentage that would be given in the question multiplied by the total actual weight of the end product that is produced. Okay, and excluding the losses. Okay, and that would be the revised standard quantity. So, of course, material mix variance is a type of usage variance. So here also we are going to change in the quantity or change in the usage multiplied by the standard price. Very similar to material usage variance. So material usage variance is standard quantity minus actual quantity. What is the end product multiplied by the standard price? But what is the mix variance? Revised standard quantity minus actual quantity multiplied by the standard price. So this is the material mix variance. Next comes the material yield variance. So yield is nothing but the what is the yield that you have got. Finally, the end result, whatever the standard result and whatever is the actual result is nothing but the net output, maybe in kgs, okay, or in numbers. So that actual yield minus standard yield, yield is nothing but the net output, which we can see in the upcoming problem, multiplied by the standard output price. Standard output price is nothing but how much kg of end item has been produced and what is the price of that end item, and you have to find the standard output price by dividing the material cost of the output that is produced. Okay, so that is the standard output price, which we are going to see in the next problem. So there is an alternate formula for material yield variance, which is nothing but the standard quantity. Is it standard quantity minus revised standard quantity multiplied by the standard price. So yield variance is nothing but standard quantity minus revised standard quantity. So revised standard quantity is nothing but for the same actual output, what is the standard mix? That is the revised standard quantity. So what is the standard quantity? Standard quantity is nothing but for producing the same actual output including the losses. Okay, for example, when we are mixing the two components, there will be the end item finished goods that is produced. There may be some standard losses that is taking place, and after the standard loss the end item would be produced, that is the kg of output that is produced. And for that output, whatever is the standard quantity is going to be the standard. If you exclude that loss, and whatever is the standard for producing without the losses, that will be the revised standard quantity. So many students get confused here, and all this confusion will be sorted out when you see an example problem. Okay, and that is called material yield variance. So as per your book, the classification of this formula has made much easier, but this is not an opportunity to mug up, but you can just do this order. But we have a checkpoint. Even if you miss this order 1 2 3 4, the book has given standard quantity into standard price, revised standard quantity into standard price, actual quantity into standard price, and actual quantity into actual price. So first step is to calculate 1 2 3 4, and yield variance is going to be 1 minus 2, mix variance is going to be 2 minus 3, usage variance is going to be 1 minus 3, and price variance is going to be 3 minus 4, material cost variance is going to be 1 minus 4. These are all the formulas. Okay, here I have seen many students who mug up these, and exactly they will put the opposite in the examination and the whole problem will go wrong. Okay, so I have put this, which is a screenshot which is given in the book only. If you want to go up mugging up, there is a high risk, because all the terms standard quantity, revised standard quantity, actual quantity, there will be a lot of confusion for you. And so maybe some students may have a very innovative approach to mug up also. Maybe they will deliver correctly, but very easy thing is to just, you can see material price variance is nothing but 3 minus 4. Okay, so what is 3? 3 is actual quantity, says standard price, and 4 is actual quantity, actual price. So what is this 3 minus 4? If you do 3 minus 4, which is nothing but AQSP minus AQAP. So if you take AQ common out, SP minus AP. So change in the price. So price variance is change in the price. SP minus AP multiplied by AQ. So price variance is done. So you need not mug up at all. So usage variance. What is usage? Change in the usage or change in the quantity multiplied by the standard price. So 1 minus 3. So 1 minus 3. So here you can see standard 1 and 3. Standard price is common. You can take the standard price common out. Standard quantity minus actual quantity bracket multiplied by standard price. So that is going to be the material usage variance, which is 1 minus 3. You need not mug up at all. What is mix variance? Mix variance is nothing but revised standard quantity and actual quantity. What is usage variance? Standard quantity and actual quantity. In that place of standard quantity, if you put revised standard quantity, then mix variance will come up. So you need not muck up at all. So what is the yield variance? Yield variance is the difference between standard quantity and revised standard quantity. So SQ minus RSQ braces multiplied by standard price will give you the yield variance. And there one more formula for yield variance that also we discussed. We will see in the next problem. So I am going to the problem, guys. So why we should not miss the standard costing problem is, you will work out, you will find the answer, and that answer is correct or not also we can check, and that's why we should not leave the standard costing in the costing paper. Please attend the standard costing problem, only then you can able to get pass or get exempted. Okay, so now I will show you how to calculate the variances and what is the alternate methodology or easy methodology to calculate the material yield variances, and how to check whether my answer is correct or not. All these things we will discuss in this problem. This illustration is taken from your book only. So the standard cost of certain chemical mixture is 40% of material A at 200 per ton. These are all standard. Okay, for creating the chemical mixture, the company is taking 40% of A, which is bought at 200 rupees per ton, and 60% of B, which is bought at 300 rupees per ton. Okay, and when you mix this in this proportion, there will be a standard loss also. Okay, so any company will have some loss, because for example, when the chemical reaction to takes place, it requires 100 degrees Celsius temperature. When switching on the machine slowly from normal room temperature to 100 degrees Celsius, it will take some half an hour time, and you have to put the chemical before that, and during that 5 minutes of time to reach to 100 degrees Celsius, any chemical mixture that would have been lost. Okay, but we have to do that loss, then only after achieving 100 degrees Celsius the correct chemical would come. So any company will have process loss, maybe during the start of the day or during the changeover from one chemical to another chemical. There may be some chemical left out in the furnace which will be washed away. So there will be lot of standard loss that will take place. There may be some abnormal losses also, and we have to question as a finance department, manufacturing team, why there is a abnormal loss, and that will also booked in the separate abnormal cost center. If you work in the company, you will have some abnormal usage and all has to be booked in separate cost center. It has to be booked. So standard loss for this question is 10%. Okay, during the period they used. Okay, during the period they used, which means now we are going to discuss about the actual quantity. Okay, so what is standard costing? Whatever is the standard, yes, we got all the details. 40% A, 60% B, 200 is the standard price of A, 300 is the standard price of B, standard loss is 10%. So these are all standard. Okay, now we are going to what is the actual. So during the period 90 tons of A is used, and actual cost at which I bought is 180 per ton, and 110 ton of B is used, and the cost at which I bought it is 340. The actual weight that is produced is 180. So at the end of this period, what we are discussing in the question, at the end of the period, 182 tons of good production. So 182 tons of good production, which means after the losses we have produced 182 tons of good production. So calculate and present the material price variance, usage variance, mix variance. Okay, So in the sense, all the let us calculate all the material variance. They have not mentioned material cost variance. They have not mentioned material yield variance. Let us calculate that also. Okay. So now I am putting a very simple tabular column. So this is the material. First, A is the material. What is the actual quantity of A? 90 tons is the actual quantity of A. Yes, we have taken it. 110 tons is the actual quantity of B. Now I am just adding it those. So output, how much should have come? 200 tons should have come. 90 plus 1 ton, 200 tons should have come. That should have been the output. But how much output has come? 182 tons has only come as good production. So 182 is the net output, or yield is only 182. So how much is missing? 18 tons is missing. So that I am accounting as loss. So that is the loss. So these are all the actual data. Now we will go to the revised standard data. Okay, what is revised standard data? Next we have to go to revised standard quantity, and then only we have to come to the standard quantity. So how to find the revised standard quantity? We have already discussed in our previous slide what is the formula for revised standard quantity. Standard mix of actual output excluding any process loss. What is the actual output excluding process loss? 200 tons is the actual output excluding the process loss. This 200 tons I am fixing here also. To find the revised standard quantity, 200 tons. So as per question, 40 percentage and 60 percentage is standard. So 40 percentage of 200, 80 tons is revised standard quantity of A. Similarly, 60 percentage of 200 is 120 is the revised standard quantity of B. Now standard loss is given as 10 percentage. I am calculating the 10 percentage of 200, which is 20. So 200 minus 20, 180 is the net output yield. So net yield or net output as per revised standard quantity is 180. Now next step is to find the standard quantity. What is standard quantity? Standard quantity is nothing but the standard mixture of A and B for the net output of actual quantity produced. So I am fixing this 182 actual quantity for producing this 182 actual quantity. What is the standard? We have found the revised standard quantity, but that is giving you output of only 180, but our actual output is 182. For making 182, what should have been the standard? So that is what we are going to calculate now. So I am fixing this 182. This is the one for 182. So here what will be the standard quantity is nothing but 80.89. So how this 80.89 is calculated? It is nothing but 80 is the revised standard quantity for 180. Then for 182, the standard quantity is how much? So 80 multiplied by 182 divided by 180 will give you 80.89. So 80 is the standard for 180 output. 80 is the standard for 180 output. Then for 182 output, how much will be the standard quantity of A? That is what? 80.89. Same way, 120 multiplied by 182 divided by 180 is going to give you 121.33. So now if you add these two, output will be 202.22, and now if you reduce 10 percentage, automatically 182 will come. Now we have found the actual quantity given in the question, revised standard quantity also given in the question, but standard quantity we have calculated. Okay, so remember one thing guys, if this table is correct, everything will be correct only because you know the concept. I know my students will know the concept. Okay, so the simple approach is for actual quantity, ignore all the losses. What is the actual output? Fix that output. You will find the and apply the standard mixture given in the question. You will find the revised standard quantity. Now for this actual quantity, after excluding the losses, what will be the net yield? So that yield, for that yield, whatever is the standard, that will be the standard quantity. Okay, so this is what is the, so now you know the standard quantity, actual quantity and revised standard quantity. Also actual price and standard price, that is given in the question. Standard price is given as 200 and 300, we have taken that, and actual price is given as 180 and 340, which is given here. Okay, now as per your book 1, 2, 3, 4, we are calculating all the product, okay, for both A and B. So now you have A. So what is the standard quantity into standard price? Standard quantity is 80.89, standard price is 200. Take the product here. So A plus B, if you find, that is the total products. So you are finding the total here. A plus B is the total here, which is I have calculated here. Now what is the price variance? Material price variance is nothing but change in the price multiplied by the standard quantity, sorry, multiplied by the actual quantity. So what is the change in the price? So 3 minus 4 is the formula, 3 and 4. So change in the price, so standard price minus actual price multiplied by the actual quantity will give you the material price variance. What is the material usage variance? Change in the quantity multiplied by standard price. What is the change in the quantity? Standard minus actual. So standard usage or standard quantity minus actual quantity bracket multiplied by standard price. Next, what is the material mix variance? In place of standard quantity, we have to put revised standard quantity. Revised standard quantity minus actual quantity braces multiplied by standard price will give you the material mix variance. What will be the material yield variance? Standard quantity minus revised standard quantity multiplied by actual multiplied by the standard price will give you the material yield variance. What is the material cost variance? Material cost variance is very simple. Standard quantity standard price minus actual quantity actual price, that will give you the material cost variance. So material cost variance is very simple. Okay, standard quantity into standard price will give you the standard cost of the product. Actual quantity into actual price is going to be the actual cost of the product. Standard cost of the product minus actual cost of the product is going to give you the material cost variance. Okay, so now we have calculated it. So now we have calculated the variances. Now whether it is correct or not, how to find it, that is very easy approach. That's why you have to attend the standard costing without fail. Okay, now if you see material price variance is 2600, material usage variance is 1577. Just add these two, material usage variance plus material price variance. You add these two and your answer will come to material cost variance. Okay, so material cost variance is divided into material usage variance and material price variance. So if you add these two, it should tally with material cost variance, then your answer is correct. What answer is correct? Material price variance is correct, usage variance is correct, material cost variance is correct. Now how to check the material mix variance and material yield variance? Now add material mix variance plus material yield variance, and that should tally with material usage variance. Then your material mix variance and material yield variance is correct. Now you understood, guys? So material price variance plus material usage variance should tally with material cost variance. Now these three variants are correct if it is tallied. Next checkpoint is material mix variance plus material yield variance should tally with material usage variance. This is the next check. If these two checks are correct, your problem is correct, you will get the full mark. Okay, fixing this also you can any steps mark you should not lose. You can from bottom up approach, so you can work the table also and close it. Okay, all smartness is with you, so you can surely do it. Now in our discussion of the theory, we discussed about alternate way to calculate the material yield variance. Okay, to check material yield variance, there is one more formula, actual yield minus standard yield. So students, except material yield variance, all other variances will be standard minus actual only. But material yield variance alone is actual minus standard. Why? Because it is a yield variance. So what is yield? Yield means the stress is given to the output. So output is nothing but the actual quantity. So the stress is given to the actual quantity. So it is called output variance. So actual yield minus standard yield multiplied by the standard output price. So what is the actual yield? If you see here, 182 is the actual yield. What is the standard yield? Is nothing but the revised standard quantity is 180. So 182 minus 180 multiplied by standard output price. What is the standard output price? Standard output price is nothing but 80 is the standard quantity, 80 is the revised standard quantity, 80 multiplied by standard price, 120 multiplied by the standard price. Now if you add these two, it comes to 52,000. So 52,000 is the total cost for producing this 180 output. So 52,000 divided by 180 is the standard output price. So what is the cost of the output divided by number of unit or yield of output that is generated, that is the standard output price. Now if you divide and it's coming as 577.78, it is also tallying with 577.78. So whichever formula is easy for you, you can use it. Material yield variance can be calculated by standard quantity minus revised standard quantity multiplied by the standard price also. Okay, if you want to use that, you can use that formula. Or you can use actual yield minus standard yield bracket multiplied by standard output price. Okay, so students, I hope you will understand, and now you can rewind and see the explanation that I have given in this video. Maybe that would be more easier to understand after seeing this problem. So practice. Okay, I will go in my next video, one or two problems of material variances I will discuss, and then I will go to the labor variances. All the very best, guys, and please, if you have any doubt in the formula, or you have some more easier formula, please share a comment, okay, detailed comment, so that any other student who is watching the video, they will also get benefited out of it. Okay, so all the very best, students.